guys, it's Linton here from Greenbox Markets. Trust you all had a great weekend and that you are ready to go for the trading week ahead. January is past us and we are now basically at the beginning of February, or we've had a couple of days in February already, but this is really the first big week of February. And I just want to run through our last 2 months with you quickly. So this video is specifically aimed at our managed account clients and then guys who are using our trading signal service or subscribing to our trading signal service. So this video is specifically aimed at you, but this is also a good video for anyone who's looking at investing with us or getting into business with Greenbox Markets from a signals perspective or any other products that we offer. So December was a break-even month for us, which in general isn't really that bad for December. Honestly, you know, December can be a challenging month due to big institution sell-offs, etc. Guys positioning themselves in the market and getting ready for the change of the year to the new year. And then in January, we also had a negative month. We actually had a negative month in January. We were just over 3.5% down. And this again is due to lack in volumes or an increase in volumes, and you've got institutions coming back into the market and again positioning themselves for the year ahead. So quite often December and January can be tricky periods for trading, and that is definitely what we faced through December and January. What we decided to do though, just so that we can show you what the potential results are and potential projections for 2018 are, we decided to go back 3 years and do a full manual back test of our trading strategy on the currency pairs that we have selected to trade with this strategy. So currently we have selected 12 currency pairs that we trade with this strategy that it is most effective on, and we also trade a little bit of gold with this strategy as well. So we have included all 13 instruments in this assessment for the last 3 years. Now guys, I just want to tell you this was a lengthy exercise. It was quite a challenge for us, and the main reason was because we decided to do this manually. So what we've done is we've actually gone back to the start of 2015 and we started applying our strategy from January 2015 to all 13 instruments. Every single trade that would have taken place we manually put into the charts and had a look at exactly where we would have entered the trade and exited the trade. So this wasn't done by a computer, this wasn't done by backtesting algorithms, etc. We have a manual trading strategy, so we don't trade with algorithms or EAs on our investment platform. So this was all manually done, and the results are quite astounding. So without further ado, I'm going to take you across to the computer quickly, and we're going to have a look at exactly what it is that happened over the last 3 years with our strategy, because that is going to give us a really good indication as to what we can expect for the remainder of 2018.
Okay guys, so I am really excited about 2018 and what the year holds for us. I think let's run through the last couple of months quickly and then on to what we expect for the year ahead and where we see our trading going. So the first thing I'm going to do is I'm going to just run you through the process that we went through in terms of doing the back test for the last 3 years. So we went back to the beginning of 2015 and we back tested our strategy very, very accurately on 13 instruments. Well, these are the 13 instruments that we selected for this back test. So we've got the Euro US, the Pound US, Dollar CAD, Aussie Dollar US, New Zealand Dollar US, Euro CAD, Euro Aussie Dollar, Euro Pound, Aussie Dollar Yen, Euro CHF, Dollar Franc, CAD Yen, and then also gold. Gold is actually a very, very big performer for us on our strategy, and I'll get to the performance there in a moment. But let's have a look at Euro US quickly. I'm not going to bore you with all the facts and figures. I'm just going to explain to you how this backtest result is set out. Now the entry and exit points on our strategy are very, very accurate in terms of where you would enter the market and where you would exit the market. There are very, very specific parameters with regards to that. So our backtest is accurate down to the final pips that you can see here. So in January, you can see that there was 2 trades that took place and both of them were break-even trades. In February, we had 6 trades that took place. And these values that you can see here are the profit and loss for each trade. So there you can see February actually ended up being a negative month for Euro US in 2015. So that was 100 pips in total negative. In March, you can see that there was only 3 trades, but look at the pips banked. 730 pips banked in March, and so forth and so on. And what we did is we did that for 2015, 2016, and 2017. And we did that on every single instrument that you can see here, all 13 instruments. Guys, this was a lengthy exercise. It took a lot of brain power and dedication and a lot of coffee to get through it. But it's done, and it has yielded some fantastic results, and it really has me excited about what we can expect for the remainder of 2018. So what this then gives us is it gives us a percentage per month in terms of your capital investment that we would have achieved as a return. And what we have done after going through all 13 of these instruments, there you can see all 13 of them have been completed with the pips for each and every single trade that would have taken place over the last 3 years, and that has given us a final result. Monthly profit and loss, if we have a look here. So these are the results as pulled through from each individual pair. So here you can see the currency pair. This is year 2015. And over here you can see the month and the percentage return that it achieved. And that would be the total for the year for each currency pair. If you add up all of those totals for the year and each month, that gives you 145.299% return for 2015 at an average of 12% per month. Now that is a really, really good rate of return, guys. But the thing that's important to note is that there are negative months in between. So here you can see January was a negative month. And here April was also a negative month, 5% down. So do negative months occur? Yes, they do. Of course they do. In any strategy, you're going to face a month where it doesn't work. And that is purely because of market conditions. Some strategies are optimized for small movements and for consolidating markets, and other strategies are optimized to capitalize on trending markets, as our strategy is. So when we see trending pairs, our strategy really, really capitalizes on those pairs, and we are able to build really, really big positions. As you can see, I'll take you back to the Euro US. In March, March of 2015, there you can see there was a 600 pip trade. Now, most of the guys who trade Forex generally don't get to those kind of levels in terms of the pips on their trades. Most guys are quite happy to take 50 pips off the table and some even less. And in general, what happens is you end up risking your risk to reward levels are quite low. And what we try and do is maximize potential in terms of risk to reward. So what we do is we maximize trending currency pairs. So even though we have a negative month here and there, in general over the year, if you add up the trending pairs and the trending trades, you will see that the profit and loss actually looks really, really good. So I'm going to take you back here to our overall profit and loss. So in 2015, we looked at 145%. 2016 was 225%. That would have been an absolutely phenomenal year, an average of 18.7% per month. There were no negative months in 2016, surprisingly, but that was a really, really, really good year. If we look at 2017, we can see 150% at an average of 12.5%. So quite consistently above the 10% mark per month, and that really is the magic number for us. That is what we've been aiming to achieve with this strategy and the way that we've put it together. The end goal is to earn approximately 1% per month from a currency pair and have 12 or 13 instruments, giving you your in excess of 10% return per month. And that then obviously compounded over time has astounding results in terms of your investment returns. I'm going to move on to our performance chart. So what we've done is we've taken all of this information and we've actually put it into a performance chart, just so that we can put it into perspective for you. Obviously, we've had a challenging month in December, as I explained to you. So we were slightly negative there, basically break even. But January was a negative month for us at just over 3.5% down. And that was the main reason for doing this. We decided that we just wanted to put things into perspective. You know, if you're a new investor who's just started out with us and you may have invested at the start of December, you would be wondering, you know, is this really working for you? But the key is to look at a longer term objective, longer term goal. You know, wealth isn't built in a couple of weeks. Wealth is built over time. And if you have a systematic approach to building wealth, that is the way that you're going to be successful in the Forex market. There are a lot of fly-by-night guys out there, and there are a lot of guys who promise absolutely ridiculous returns. I hear things in the region of, oh, we can achieve 30, 40, 50% per month consistently. But the second you ask for the actual proof of the results, there's nothing there. Guys, and this is why I wanted to do this with the strategy, is to actually show you that the results are there. I can prove to you that the strategy works. And I can show you that over time, these are the kind of results that we are going to achieve. Yes, there will be negative months in between there. But the guys who really hold on and the guys who can see the bigger picture, who are in this to actually build financial wealth, they're the ones who aren't going to notice those months, and they are the ones that are really going to be smiling at the end of this exercise. So let's get on to the performance chart. So this is a performance chart from the beginning of 2015. And as you can see, there are little pullbacks here and there, but in general, because of the diversification across 13 instruments, it is a very nice, consistent looking chart over time. Now, if you look at this point over here where my mouse cursor is right now, that is November of 2017. And you can see that that is where our peak was at a total of 509.941. So let's call it 510% return on investment from the start of 2015. Now, this is November. So December and January brought us down to 505.5% return. So yes, there was a loss from the beginning of December to the end of January. But in terms of the bigger picture, guys, this is a very, very small pullback. And in terms of the potential of the strategy, where we're going with this, that really is just a blip on the radar compared to where we should be at the end of 2018. Now, as you saw on the results that I showed you over here, we were averaging well above the 10% per month mark. And like I said, that is the golden number. That is our target, and we're hoping to achieve that. This strategy is comfortably achieving that. Now, granted, there may be instances where some of these trades are missed due to the time of the triggers, etc., because we trade manually, we don't trade with EAs or algorithms. So let's take off a couple of percent here and be realistic and say 2015 was a 12% per month year, 2016 was a 18% per month year, and 2017 was 12% per month. So let's shave off a couple of percent for the fact that, you know, we do have to take a little bit of time off here and there, and there are going to be some trades that we possibly wouldn't see if they trigger at 1 o'clock in the morning our time. I'm certainly not watching the charts at those hours. So if we can still achieve that golden number of 10% per month and compound that over time, I guarantee you that that will build you more wealth than any form of normal investment that you've seen. Obviously, that depends greatly on us achieving those goals, and we cannot guarantee that we will achieve those percentages. But guys, if you look at the history of the strategy, it is very, very apparent that it is extremely possible for us to achieve that. Over here on the right-hand side, I have used a compound model to try and show you the potential of what compound interest can do to your investment. So I've looked at an initial investment here of $1,000 as a starting point for a compound investment with us. Now, what compounding means is that every single month, the percentage achieved is added to your initial capital, and then the following month, your profit is based on the total sum of your initial capital and the previous month's profit. So in other words, your percentage gains start to snowball, and your actual monetary value of each return grows exponentially. So if we look here at the $1,000 investment, you can see here that after the first year, we were looking at $3,600. Now that is a really big return. But if you look at what a lot of the Forex so-called gurus out there are saying and what they can achieve, that really doesn't sound like a lot of money. But guys, with the risk approach that we have, those are phenomenal returns. And if you look at what the second year brings you, all of a sudden the figures start looking very, very different. And it starts to seem like a really fantastic way to start building some financial wealth for yourself. So have a look at the end of the 2-year figure over here, $27,000. Now in South Africa, $27,000 will be worth, in the region, I'm just quickly calculating in my mind, around about 350,000 Rand. So from an investment of $1,000, which is now approximately, let's call it 13,000 Rand, a bit less than that actually, to achieve 350,000 Rand in 2 years, that is mind-blowing returns on trading. But it is very, very possible with this approach. The third year, now this really starts to look like something that is a bit too good to be true. If you look at the end of the third year and we're looking at $109,000, that starts raising some questions and raising some eyebrows. The facts, figures, and formulas in this Excel spreadsheet are accurate. And I can promise you that if we are able to achieve our target, these are the kind of returns that we are looking at on our trading accounts. And these are the kind of accounts that we are going to build and the kind of wealth that we are going to build for our clients. To get back to the performance page, if we page down over here, we can see the monthly profit and loss. So there you can see 2015 March was a massive month at 46%. 2015 July, 24%. Let's have a look at a few other months. 2016 July, 9.4%. So this gives us a really good graphical representation of what we can expect to achieve on average. And as you can see, most of these months are quite well above that 10% mark. I'm confident that going forward with this strategy, that we should, over the course of the year, over 2018, we should achieve an average of 10% per month or more. Like I said before, we cannot guarantee that, but looking at the performance history of this strategy, I'm quite confident that those are the kind of levels that we are going to get to. But there are definitely negative months in between, guys. Have a look there. We've got 2015 April as a negative month. We've got December and January, these past 2 months, as negative months. February, by the way, has also started off with a bit of a challenge, but I expect that we'll pull it back by the end of the month. So this is just to give you an idea of exactly where we are headed with this strategy and the kind of work and effort that has gone into it. It's not something that we have just conjured up and approached the market with and decided that this is the way to go. This is a strategy that took time for me to develop. I traded it personally for approximately a year, defining it, changing it, creating rules for the strategy, which is something that we are very, very strict with, is the rules. You cannot call a strategy if you don't stick to the rules of your strategy. If you bend or break your rules, it becomes gambling. So when we have drawbacks in performance, it really is because we are sticking to the stop loss levels that we have in the market. I know a lot of traders trade without stop loss levels or move their stop losses, when a position is against them because they keep thinking it's going to turn. That is a setup for disaster. We would rather have 1 or 2 or 3 negative months in a row and then rebuild from there, rather than sitting in a situation where you now have huge drawdowns in your account, open positions that you don't know what to do with. Stress levels are really high, and that then impedes your ability to trade further. So we would rather get out of those positions at our levels and then look for new setups to continue building. Guys, I hope that gives you a good idea of where we are headed with this strategy, and I hope you're excited, or as excited as I am, about where I believe we're going to go in 2018. Stop looking at the here and now and start looking at the bigger picture. And I guarantee you that wealth creation is something that can become very, very real for you.
I'm really excited about this strategy, and I'm very, very excited about seeing the results over the last 3 years and how it performed. We were extremely strict with the entry and exit points in order to make sure that the results we achieved through this backtest period are actually very, very accurate in terms of what we would have achieved if we were trading this strategy on these 13 pairs. Thanks for watching this video. I trust that you found it informative and that it has in some way, shape or form assisted you in your trading journey. Please remember to share this video on social media, guys. There are a lot of people out there who aren't getting access to excellent information in terms of the trading industry, and there are a lot of fly-by-night guys out there, so we're trying to get this message out to as many people as possible so that we can assist them in gaining the right type of knowledge for the Forex market and understanding the various facets in order to become a successful trader. So remember to like, share and subscribe. Take care. Cheers.